What if I told you this tiny bar costs more than your rent? An ounce of gold weighs the same as a AA battery, and today it's worth over $4,000. Just this year, the price of gold has skyrocketed more than 54%. But what exactly is causing this gold surge? Should we sell all of our stocks and only buy gold? Or is the gold bubble about to burst? Gold has always been the ultimate symbol of value. We can put it on anything and charge 10 times the normal price. It's extremely rare, and unlike money, we can't just print more of it. Now, I'll admit, I've tried gold ice cream. Huge waste of money. But why do people really love it? Because gold means safety, especially during times of uncertainty. The US dollar has been falling to its weakest level in 3 years, and Trump has publicly stated that he wants a weaker US dollar. Meanwhile, the stock market is hitting record highs this year, fueled by the AI boom. As a result, many stock market analysts are wondering if we're in a huge market bubble. All of this is making some people nervous about the dollar's stability, leading more people to consider buying gold as a hedge. So, big deal. More people are buying gold. But it's not just individuals. Other countries are losing their faith in the US dollar as well. Over the last 12 months, central banks around the world have been dumping US dollars and buying billions worth of gold. And it's not the smaller players. China, India, and Poland have been the top buyers of gold over the last few months. And China alone is the largest producer and consumer of gold. Okay, cool. So the biggest countries don't trust the US dollar right now. But why are they buying so much gold? Central banks use gold to protect national wealth and diversify their investments, but many investors are seeing this as a potential warning sign. If the biggest countries on the planet are dumping US dollars and buying gold, this could be a concern for people holding US stocks. So, as a result, retail investors have also been pouring money into gold stocks. Gold has increased by an average of 11% over the last 25 years. But year to date, the gold shares ETF, for example, is up over 60%. This combination of huge demand from both governments and everyday investors has created a perfect storm. Each purchase of gold drives the price higher, which makes even more people want it, causing this insane price surge over the last few months. So the question everyone is trying to answer is, will gold keep skyrocketing? Should we keep buying it or sell now at a profit? That's where the health of the stock market can give us signs. The S&P 500, which tracks 500 of the largest companies in the US, has surged over 30% in just 6 months since Trump's tariff plan was announced. This is insane growth considering the average return is just 10% annually. So many analysts are worried that the stock market, especially the tech sector, is in a bubble right now. With markets becoming even more uncertain by the day, everyday investors are seeing gold as a way to protect wealth. But people are worried about a much larger issue. Inflation has been climbing globally, and as prices rise, the value of cash decreases over time. This means the money sitting in your checking account buys less every day. Now, investors don't want their money sitting around losing value, so that's where gold comes in. Many see it as a way to protect your wealth when paper money loses value. So gold helps here too. But interest rates are creating even more problems. You've probably heard something in the news like, central banks are doing another rate cut. But what does this actually mean in everyday language? Central banks are the institutions responsible for managing the money rules of a country, like the US Federal Reserve or the Bank of England, for example. Okay, great. So what do they do exactly? Central banks control interest rates and inflation. So, central banks can decide to raise or lower interest rates. How does this impact you? When they decide to cut or lower interest rates, that means you can walk into a bank and get a car or house loan at a lower rate. But there's a problem. Cutting rates makes borrowing cheaper, but it also lowers the return you get from savings and bonds. So the interest you pay on loans is smaller, but the interest rate on your savings account just dropped as well. This makes gold look much more appealing to many investors. Why? Because the value of gold is not tied to government policies or interest rates. On top of that, the US dollar has been weakening at an alarming rate. Combine the rising inflation, rate cuts, and a weak dollar, and we are left with complete chaos, causing this insane gold surge. So now you know why gold is skyrocketing. But the million-dollar question is this: should we sell all of our stocks and only buy gold going forward? Well, large financial institutions have been hinting at the answer. There's no way gold can increase another 60% next year, can it? Well, here is what could tank the price of gold. Global events like trade tensions, tariffs, or conflicts can make investors nervous. Major financial institutions have stated that a resolution between Russia and Ukraine could push gold prices down temporarily. Still, the overall trend remains strong. Major players like Goldman Sachs and Deutsche Bank have stated publicly that they expect gains to continue. Central banks around the world continue to buy billions in gold and reduce US dollar holdings. Retail investors are following this momentum. When you combine inflation, weak dollars, and both central banks and everyday investors pouring money into gold, this has created a never-before-seen surge that may continue for months or years to come. Money Penguin is all about helping you understand finance and wealth. If you found this helpful, kindly subscribe so you don't miss our weekly videos. Thank you, and see you in the next one.